Hello and welcome to another update video about MATIC. Let's take a look at what I told you about MATIC here 3 days ago, on the 31st of May, and then we can take a look at how the chart has developed and we take a look at what could come next for MATIC. Wave A, then we're moving down in wave D. That is what I would expect next. After we might move a little bit higher here. Maybe we test the 74-cent level, but the wave C can't move higher than that. Not in this scenario, then it would be something different. After that wave C top has been reached, we would expect a wave D down and a wave E up, and that means we would go down from here. The triangle pattern is a very, very difficult pattern. It can evolve, it can extend. Okay, so when I made the video, we were at around 66 cents. As I said, we could move a bit higher, maybe to 72, 74 cents. Above that, this triangle pattern would have been invalidated. Now we didn't do it, and therefore the expectation was to move down in a wave D. Let's take a look what happened. And there you go. Let me put the triangle count on the chart again. A, B, C. Oops, not A, B, C. No, A, B, C, D, E. We want to put onto the chart in this triangle. A, B, C, D, E. So with that triangle pattern, with those triangle patterns, we can currently see this across the market, across the crypto market, that we have these triangles. Therefore, the videos seem to be a bit dull, maybe, if I talk about the same pattern across various cryptos. But of course, we want to understand if certain cryptos are in a different, in a different wave pattern. And yeah, we have a few cryptos which move completely differently, like for example, Solana, and also ADA is moving differently, for example. So we have here this triangle pattern. At the moment, this is for me the most likely view. That this here is a triangle pattern for Polygon MATIC. And as I mentioned, a triangle is very difficult to forecast. It can evolve, it can move, and so on. So what I need to say very clearly, now the way this has evolved, we cannot, let me check. No, so what in the triangle is not allowed to happen now is to have another move up above 68 cents now. So we cannot, the wave E is not allowed to break above 68 cents. If it does that, then we would have here something like a W pattern, and it would break above this level and would move quite a bit higher. So we can take a look at where that would take us. But primary expectation, as we held this level here and did not make a new high in the last swing high here, but actually made a lower high, the expectation is that also the next high would be a lower one based on this triangle wave count here. So we have currently here a symmetrical triangle. Now we have made a new swing low compared to the previous one here of 58.5 cents. So as long as we stay though above 56.4 cents, we would still expect this wave E. The reason is, in a triangle, you are in a wave D, you are not allowed to break below the wave B. So that invalidation point would be here 56.4 cents. I guess if we move down faster, wouldn't be a problem, because also this triangle here would forecast at the moment with a high likelihood a move down, because you would normally exit the triangle to the downside of, or to the opposite of the wave E. So the question is, do we now break through that 56.4 level straight away? Then it would not be a triangle. It would then probably an impulsive wave down, and we would have already here some kind of an impulse unfolding. Maybe started the wave 1 down here, the wave 2 here, and this is a wave 3. But to do that, we need to break below 56.4 cents. Or do we find support either where we are now or above the wave B low of 56.4 cents, move higher in a wave E, which is not allowed to get above 68 cents, and then move down from there. So in both of these scenarios, it is downward pressure. It is a descending, it is a downward facing chart. At the moment, both of these scenarios point to the downside. With one would sell off straight away. The other one would sell off after this wave E high, which should definitely be lower than the 68.2 cents here, that wave C high. Should we make a higher high compared to the wave C, so should we break above 68.2 cents, then be careful not to interpret this as too bullish. It would, in my opinion, only be an extension of this overall correction. Yeah, so that is very, very important to understand, but I don't see this currently as very likely. My view here at the moment is we will go down from here, either after a little bit of upside, and for that we would need to wait for a signal, or we go down straight away. So where would then this end? So my view is also that this is going to happen because what I count this like on the higher time frame is that this here currently, what we're doing in this corrective wave pattern, all of this is very corrective. A lot of up and down, a lot of retracements which are very strong, no clear move to the upside. Yeah, a little bit chaotic, that is corrective. And especially those long retracements and the mix of higher highs, higher lows, lower lows. I count this as a wave 4. The wave 4 would peak at the wave E high. That is how I currently see it. And then we would break out of the triangle to the downside, make a wave 5 low. That wave 5 low should then complete the overall correction for MATIC, and it should go below the low of the wave 3 here back on the 12th of May, which was at around 48 cents. So we would expect a price to go below 48 cents. Very importantly, yeah, this is what we would expect, how we would see this. And it could go anywhere in this target area here, but it would need to make a lower low compared to, well, 48 cents. So anything between 30 and 48 cents would be possible for the swing low, indicating that if we start to move down here impulsively and break below 58.4 cents, at least that's how it is at the moment, that would confirm the downward trend and would with a very high likelihood tell us that we are here in this final leg down, in this final move down that would hopefully complete the correction. That is how I can see it. And when we then hit support, maybe down here at the 88.7% fib level at 30 cents, if we then see a bullish signal evolving, yeah, and theoretically it would already be enough to move just very slightly below the low of the wave 3, which is that 48 cent level, 47.5. Only a very slightly lower low would be okay. And if we see a bullish signal from there, then we can be quite confident that the low is in. At the moment, we just don't see that bullish signal. I mean, here on the 4-hour chart, we can see still a bearish signal on the ADX. So a short signal, the RSI is below 50. And also here, the MACD has turned down again. This is going to translate over onto the daily, where you can see that on the daily, we see the MACD already losing steam, confirming that the uptrend is losing steam. Here, the RSI still very low, and it just doesn't have the steam. And also here, the ADX still a short signal based on all of that. And that red engulfing candle that we can see on the chart here, and that we actually had on the 1st of June already, just indicating that we will push here further down, exactly as that engulfing red candle suggested on the 18th of May, which then played out. Yeah, since then we have made lower lows and lower highs. So this is currently how I see here Polygon MATIC. A sustainable breakout, we don't even need to talk about that, below $1.03 in my opinion. For now, we are very close to the low, but if I talk about a potential 30-cent level, it also tells you that we could drop another 50% from here. That's just something we need to be aware of. And this is just a situation when you're very close to the low. You know, we could still drop a little bit more, but the minimum requirements for this overall correction on the Polygon MATIC chart, they have been fulfilled. Yeah, we've been talking about the 30 to 60 cent level since January, I think. Yeah. So when we were up here at around $2.50, I gave you this target area, and we've come perfectly into it. And that should prove that the Elliott Wave method works very well. Yeah. And because nothing fundamental would have told you that we will get into the area between 30 and 60 cents. No fundamental analysis would have done that. So, but that means that after that wave 1 here in May, we obviously came down in a wave A, we moved up in an overshooting wave B, slightly overshooting, and then we are in this wave C, which is part of that wave 2, in which we will complete the overall correction. And all the subwaves that I just showed you, they are all part of that higher level wave 2, after which we should ideally get into a wave 3, which will help us to make new all-time highs. And then we should also move to very nice, basically we should move to new all-time highs from there. And to give you a rough idea of what we would expect then, if we go down to 30 cents, the wave 3, if we make a new all-time high, should take us to at least $4.93, $4.95, something like that. But it would be the minimum target. It would normally go higher because this is really just the minimum requirement for a wave 3. So yeah, a little bit more downside expected, yeah, unless really we can see an impulsive wave evolving now or very shortly, and we will break above $1.03. But for now, I think the downward pressure is still very, very high, and the indicators also suggest that we will come down a little bit lower still. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.